All right, we're going to jump into some alternatives. Real estate, gold, oil, crypto. We're going to run through it. I did find some pretty fascinating topics to jump into. Hopefully you enjoy some of the slides. Sorry, just need to grab a little water. All right, so let's jump into real estate. So I'm going to do a rapid fire through this, so you can read some of the notes below. But basically, this goes back to the 1960. Home prices were at 20K back in the 60s, over 500,000 today. This is in nominal prices. We've obviously had a pretty sharp appreciation post 2020, which was post COVID. You can see here we saw this big spike up because we had really low rates and there was high demand. It doesn't count for inflation or home sizes. It's just pure pricing. This next chart then shows Case-Shiller National Home Price Index, which just shows national home price appreciation. And you can see, this index going back, this data goes back to the late 80s. It just gives you an idea of what's been happening from a price point. And you can see here, we had this dip during the financial crisis and then the bottom out in 2012. And then we've seen a really healthy rally post 2012, I should say, or post 2008, and then again a massive surge here with when COVID hit in 2020. When we look at real residential prices, I found this even more fascinating. So this one just shows like the true index. This one shows real. So we've finally over the last several years got above the previous high in 2006, and from a real perspective, when you adjust for inflation. And again, a big part of what got us there was that we had low interest rates. Well, the reality is over the last 3 or 4 years, you can see prices have really stabilized, and we're not seeing a lot of upside here because of interest rates being higher and some pressure on affordability. And then when we look at all transaction, like the home price index for California, so like California prices have 9x'd since 1980. They really outpaced national trends. We did see a significant drawdown in 2008 to 12. We've seen this run up here, and we're still seeing home pricing do well. But it definitely the appreciation is beginning to slow in the current market. So hopefully that's helpful just to give you a snapshot of where things are. So real estate market, there's definitely a lot more inventory. Home prices are leveling off, and frankly, that's healthy. We went through an unhealthy period of time. Real estate, we shouldn't see prices. Like if you look here post-COVID, we shouldn't see prices jump up in a 2-year period by 30%. That's just not healthy. It's not sustainable, and it really disrupts a local market. As homeowners, we like it. Our homes are valuable, but it's really disruptive for just the overall employment environment, workers coming into the area. It can be quite disruptive to that. And so seeing some more price stability is a good thing. It's healthier for the economy, in my opinion. Okay, when we jump into gold, gold's been a really good performer here as of late, so it's definitely hit the headlines. This does show gold going back to 1970. So essentially, we had a period where, if you look at the chart down here, from 70 to 80, gold did extremely well. It hit this, price point relative to the market, this massive gap. But then from that time to about 2000, the stock market, did significantly better. And then gold has been on the ascent for the last 25 years. But what this shows you, the S&P has been a much stronger grower, right? That doesn't mean that's always going to be the case, but that has been the case. And my sense is, when you're investing in the markets, you're investing in companies, right? You're investing in NVIDIA and Apple and Amazon and Google, these companies that are generating profits, generating revenue. And so you can see pretty substantial difference there. More volatility when it comes to the equity markets, but equities have outpaced gold over the years. And while gold might be a suitable diversifier, we still feel like being in equities long term is a most important place to be in terms of just having growth assets. One of the things that people talk about, investors, economists talk about is that, we're going to put gold in there because it's a good inflation hedge. And actually this shows you that it's not a great inflation hedge. So between 1970 and 2024, gold has delivered positive annual returns just 58% of the years. The equity markets are closer to 75%, and so even so, there are some periods of downside, especially when you look at inflation. And so, a lot of times we look too much at the near term, like what's happened recently, and try to forecast that long term. And so we've been in a healthier environment for gold as of late, but that trend can absolutely change. So just be mindful of that. Oil markets, and so I do think it's part of this current administration goal is to get oil prices down, knowing that the price of oil, the price of energy trickles down into our economy. One of the ways to keep inflation under control is to drive down energy prices, and so we can see here we've seen we saw a spike up here. We had a massive hit during COVID when the economy stopped. And now we're in an environment where we're seeing pricing come down, and so I think we'll start seeing per barrel in the 60 to 80 range seems to be pretty healthy. Not sure if it's going to go below that. This chart on the right also just shows that we are in a net export environment. So we went through the 70s, 80s, and 90s as heavily relying on importing oil to drive our economy, and now we're an exporter, which is pretty amazing. Okay, and then the last part of the alternative section is looking at some crypto regulation, market snapshot. So there's a Genius Act was just recently passed. It basically created rules for crypto exchanges to protect investors. It basically requires the platforms to verify users, show proof of reserves, meaning they have reserves that back what they say they're going to back, follow stricter security standards. So this is all good stuff. It just provides the industry a lot more legal certainty, and so that there's a framework to work inside of. In terms of what's happening in the crypto market, Bitcoin is about 118,000. Year to date, it's up 78%, so it's had a massive run. Ethereum, which is the second largest crypto, is up about 15% for the year. Year to date, it's done quite well. The SEC approved spot Bitcoin ETFs, which means you can just buy it as an ETF inside of a portfolio, inside of an IRA, inside of a brokerage account, which is allowing for more mainstream adoption. And I think just having clearer rules, there's more growing investor confidence. The reality is, for people investing in cryptocurrency, and digital assets, the amount of volatility there is massive, right? You've seen periods of time where you've had 80% sell-offs in these positions. And so while they might be an important part of a portfolio, or could be an important part of the portfolio, the volatility needs to be understood there better. So if that's something you have questions with at Vance Wealth, we have built some of this into some of our models, looking at using the Bitcoin ETF. And so if you'd like to unpack that a little bit more, please feel free to ask your advisor to provide some more details around that. If you're new to Vance Wealth and you're just uncertain about what's happening with your tax strategy, your investment approach, or you just want a second opinion, we'll do a complimentary consultation. So please just reach out so that we can, we'll want to gather some documents, ask you some questions, and then we'll be able to give you a report that does a deep dive on your investments and your plan and give you some guidance, and maybe would be a good fit to help you on a go-forward basis. You can reach us, you can schedule an appointment, just go to vancewealth.com, and you can schedule an appointment there, or you can call the office at 661-775-0950. Thank you very much. I hope you found our 2025 mid-year economic and market update valuable. Again, please like and subscribe on the YouTube channel, and we're looking forward to reconnecting in the future on our next video. Thanks.